Tony Reda, CEO of Tectonic Metals. Tectonic trades on the TSX-V under the symbol TECT and the OTCQB under the symbol TETOF. Their current market cap is $25 million Canadian. Tony, thanks for joining us today.
Thank you for having me. It's a pleasure to be here.
Could you give us a 30-second high-level overview of Tectonic Metals?
I sure can. So Tectonic is a mineral exploration company, more specifically focused on gold exploration currently at the moment. We have one main core asset that we're focused on. That's our flagship, if you will. It is in the Tintina Gold Belt. It's also 40 kilometers from the fifth largest undeveloped gold deposit in the world. And Tectonic's really about looking at the junior mining space and asking the question, can we do things differently and better? And that different and better stems from years of experience in the mining space across our entire team, from our board of directors right through to myself. I'm one of the founders of this company. I'm not saying we have all the answers, but we have the wherewithal to ask the question, at least. I think that's extremely important. So we look at finding opportunities that represent mining opportunities, not just an exploration or a drill play. And we try to get alignment. Well, actually, not we try. We actually do get alignment from local communities and First Nations before we acquire these projects, and look at not just the geology, but the other inputs to what could potentially make a mining opportunity. And that's the environment, communities, First Nations, engineering, things of that nature. So that's kind of our approach. Ultimately, to put it very simply, we're here to find a mine and to do it ethically and responsibly and in unison or hand in hand with local communities and First Nations.
Well, thanks for everybody that's tuning in today. Let's jump in. Your flagship project, the Flat Project, is located in Alaska within the Tintina Gold Province. Can you tell us why this is an attractive region, where the closest major gold projects are, and why you think the targets you have at Flat are similar to other operating mines and exploration projects in the Tintina?
First and foremost, I think there's definitely a move back to North America, the flight to homegrown resources, from whether or not it's government or major mining companies or just institutions saying, hey, let's keep this close to home. There's obviously let's call it the China and other countries where they're, everyone's kind of making this move to sort of lessen their dependency on other countries. So North America is definitely a place that's getting more and more attention. Alaska and Yukon, or the Tintina Gold Belt, let's just say, this is, I think it's like a 175-mile belt that transcends from northern BC into Yukon and into Alaska. And this belt, or this province, the Tintina Gold Province, is just rich with mineral endowment. You have producing mines. You have the rich Klondike placer gold production that came out of that. A lot of people don't look at the placer gold element, but again, a sign of a very robust mineral district or province is mineral endowment. And so that's placer gold, lode gold, and then there's copper deposits, producing mines. So this belt is kind of getting a lot of attention as of late. And ironically, a lot of our team members have had success in this belt. One of the biggest contributors of lode gold into the total endowment of the Tintina was Kaminak Gold Corporation with the Coffee Gold project. That was about a 5 million ounce gold system. We were involved in the discovery of that, the advancement from, never been drilled right through to 5 million ounces, producing a feasibility study, and then being acquired for $520 million by Goldcorp, now Newmont. The belt has the potential to yield, very significant large-size deposits or tier one deposits. And the other side of the equation is Alaska. And, like I said, the Tintina Gold Belt transcends from northern BC into Yukon, into Alaska. But Alaska is kind of like the forgotten stepchild. And as far as mineral endowment, it contributes a significant, if not most of the ounces, I would say, off the top of my head, to that gold belt. And again, Alaska is like the equivalent size of BC and Yukon combined. So just think about just how much space there is to cover 7 producing mines just in Alaska alone. So that's a pretty significant draw for any exploration company, especially if you're trying to find a tier one gold deposit in your backyard. The closest deposit or mine to our flagship asset, which is called the Flat Gold Project. As I mentioned earlier, we're 40 kilometers away from the 5th largest gold deposit in the world right now. That's called Donlin. It's roughly 40 million ounces, co-owned 50-50 by Barrick and Nova Gold.
The targets that you have at Flat, can you kind of go through why they're maybe similar to Donlin or, let's say, recent discoveries in the Tintina, like Snowline?
I would say, a lot of the deposits or mines in the Tintina Gold Province are called intrusion related or bulk tonnage intrusion related or reduced intrusion related. They're all like a version thereof. And the most simplest way I can sort of explain this to a lay person is that, if we're all part of the same family, my last name is Reda and I have two sisters. We all have the same blood and the same last name, but we're all different. And so that's kind of the theme, but we all hover underneath this last name umbrella. And the same things with the sort of the intrusion related gold family. The granddaddy of that deposit model is actually a mine in Alaska called the Fort Knox mine, which Kinross owns. This is an interesting sort of deposit or mine because you have it's a bulk tonnage and just completely mineralization, it's just a sea of gold. And then you can have these quartz shaded veins that can carry up to 30, 50, 80 grams per ton gold. And the concentration of veins sometimes leads to better enrichment in certain drill holes, things of that nature. So Fort Knox kind of really got people curious because this was a new deposit style. And that's kind of where the term reduced intrusion related gold model came from. And then there was a recent discovery as of late, which you mentioned was Snowline. That fits the criteria of the same deposit classification. And then, Donlin is kind of debated, just how much of it is, or if it is a true reduced intrusion related gold model. Gold there is hosted in dikes. And then flat appears to be, very much similar to Fort Knox. In fact, the group that advanced the Fort Knox mine from discovery into production was the same group that drilled the first few holes at flat. And that's Robert Friedland with Fairbanks Gold. He's in the Mining Hall of Fame. His bio actually states the Fairbanks Gold. So they actually drilled the first few holes. And this was back in the 80s at our flat project. So those would be our closest analog would be Fort Knox mine. In the same breath, there are similarities between our mineralization and the mineralization observed, a bit at Donlin, but more so at Snowline.
Got it. So the what you have at flat is, these intrusions and sheeted veins, maybe some disseminated gold in the intrusions and the surrounding hornfells, I'll call them, around those intrusions. And that kind of forms for a big bulk tonnage deposit if it works out. Second question, on your slides, it says your business model focuses on mining opportunities, not drill plays. What does this mean, and how does this approach create value for shareholders?
That business model was orchestrated when Tectonic was born. And like I said, it was about asking the question, what can we do differently? And then really simplifying not just our messaging, but also our actions. What are we trying to do here? And I say, we're trying to find a mine. Okay, well, how do you find a mine before anyone else knows it's a mine? It's like I use the analogy, how do you find that all-star athlete, whether it's Michael Jordan, Wayne Gretzky, Connor Bedard, or Connor McDavid, to use the, hockey, given that we're in the playoffs now. How do you find that talent at age 10? So there's certain things you look for. And for us, we're not fixated on a drill play. And there are, 2,000 junior mining companies. And, I invest in the space and, some of them are my peers and some are actually truly out there to find a mine. And some, I'm not saying they deliberately or consciously know what they're doing, but they get so fixated. And this is sometimes true with geologists too. They get so fixated on a showing or occurrence. I get projects pitched to me all the time. It's like, okay, from an investment or an acquisition perspective, I'm like, okay, you have this occurrence. But how does this occurrence turn into a mine? And so you have to, we have this belief that big deposits leave big footprints. So Mother Nature can hide 100,000 ounces, but when you're trying to hide, 20, 30 million ounces, it's kind of difficult. There's going to be smoke. And so there's things you look for. So we try to identify those opportunities and then we run it through a sort of a mine economic formula. So we can take an occurrence or property that's never been drilled, or let's just take flat, for example, our current, flagship that we have here. What makes this a mining opportunity, not a drill play? Well, first and foremost, we're predominantly on native owned land. We can't ignore that if you're actually focused on finding a mine, then permitting is a huge factor in deciding, do I acquire this project or not? If this project's located in a national park or next to a national park or some sensitive area, you're swimming upstream. Why do we really want to take that on? I always say, do I want to spend 20 minutes of every hour talking about why this is a good jurisdiction. And then the other aspect that we look at is the communities, First Nations. We look at the environment. So this, even though it's an occurrence, this is all the due diligence that we do up front. And then we get into the geology side of things or the mining side of things. Okay, is the mineralization at surface? What's the deposit style? Is topography an issue? Is infrastructure an issue? Is metallurgy, is an issue or can be an issue? Then we also look at the mineral belt, the jurisdiction. So we're, for example, flat. It's in the Kuskokwim mineral belt. It's already produced one tier 1 deposit. We're 40 kilometers away. Could there be another tier 1 deposit lurking in the shadows? All right. We're in the third richest placer mining jurisdiction in all of Alaska. 1.4 million ounces of recorded placer gold production coming directly out of our property. Tells us that there's, where's the source for that gold? Another box ticked for mineral endowment. Third, massive geophysical anomalies. These are 6 kilometers by 5 kilometers that represent potential intrusions or confirmed intrusions that via drilling that need expansion. There's another box ticked. We're in unglaciated terrain. Golden soil sampling is a great tool to identify bedrock mineralization. We have a 4-kilometer long golden soil anomaly. 4Ks is massive. That is, and the other thing to add another layer to that, this project had 55 historical drill holes. Every hole hit gold. We know definitively, or with a lot of confidence, I should say, that the soils can be trusted to deliver bedrock mineralization because we have a 100% drill success rate. The geophysics, 100% drill success rate. Another thing that we did metallurgy on the historical drill core before we even put one hole into this. Why do we do that? Well, Donlin's a refractory deposit. I don't want necessarily a refractory deposit. There's a lot of refractory deposits that are actually economic, more so in Reno, Nevada, things of that nature. But we wanted to know what we're dealing with before we diluted our share structure, diluted our shareholders, and went all in on this asset. And the metallurgy came back positive. So these are some of the things when to highlight, when we're not looking just for a drill play where we're like, okay, step behind this occurrence, drill behind this outcrop. Yeah, that can work. But let's look at the bigger picture. If we're ultimately here to find a mine, then our actions need to reflect that, not just on the geology, but on the engineering, environmental, jurisdiction, political, all those factors come into the fold.
That's a great list of things that you guys looked at before you even got to, well, first acquiring the project, but then before you even drilled the project in terms of doing some trenching or soil sampling and metallurgical work. Last summer was your first summer that you completed some drilling. You drilled 19 holes, split between RC and diamond. Like you mentioned, before this drilling, there was 55 or 74 historical holes, all intersected mineralization, and the average vertical depth of those holes was 100 meters below surface, so very shallow. What unanswered questions did last year's drill results answer, and how do they tie in with the existing drilling?
First off, not all questions were definitively answered, but we did move the sticks forward, let's just say. So, sometimes these questions take years to truly understand them. And case in point, a lot of the best mineral deposits or mines in the world right now are still studied to this day. They're enigmas. Donlin's one of them. Fort Knox is kind of one of them, in some way. Hemlo, still debated to this day. The list goes on and on. So in our first year of drilling, we wanted to not get super cute, if you will, but do a few different things. With the drill, we wanted to understand the scale of the system, and also can we trust the soils, the data. And like I said, there has a 100% drill success rate. The historical drill holes, we have all the assay certificates. Most of it was done by ALS, a very well-known, respected laboratory. So, there was a certain amount of trust, but you always want to collect your own data. So we put 19 holes across 1.8 kilometers of strike, testing the anomalies, testing potential extensions of where historical drilling occurred. There was 2 drills, an RC and a diamond. So the RC was really focused on getting out into the periphery and testing some of the new areas and major step outs. Our smallest step out from historical drilling was 200 meters. A lot of companies do 25 meters, and there's relevance and importance to do that. But again, we only had so many holes. We wanted to test broad system. And I think we clearly demonstrated that the system has massive scale. 1.8 kilometers of strike. one way you can demonstrate scale is this way. The other way is down at depth. So we fired a few diamond drill holes down to 400 meters hole length, 300 meters vertical, and those holes ended in gold mineralization. To get a 400-meter long drill hole that carries gold, it's pretty remarkable. And again, a sign that the system is so robust that it can bleed out gold in a disseminated fashion right into the wall rock, just completely obliterate it with gold. So that was great. The other thing was to understand the other objective of the drilling, more specifically the diamond drilling, was to go in there with oriented diamond drilling. What that means is you're orienting your diamond drill core to get precise structural data and measurements on the orientation of the structure, orientation of the veins. And so that box was successful in achieving that. What we have debate internally, and again, I think this is healthy, and this is the unanswered question, is the goal of that structural data was to answer the question, what's controlling the high grade? Why do we have these veins that can rip 200 grams per ton? We have one intercept that was 200 grams over a meter. We have some that are 8 grams, 50 grams, 20 grams. So why is that vein enriched more than this vein and that and another vein? And so do you target structure? Do you target veins? Now, what we uncovered is that there's not just one type of vein orientation. There's multiple. There's high angle, low angle. I get very common in more mature districts, Stephen, which you are aware, like Kirkland, Red Lake, Abitibi. You got to find that. Well, usually it's the high angle ones that carry the high grade gold. So the jury, I would say, has it's a split decision. Do we get the right one? And again, it's our first drill program. So in order to get data, you got to drill. Now you take that data, you digest it, and you apply it going forward. So we have some really good data or really good ammunition now to go forward. I'm still not certain we've cracked the code on what's controlling the high grade, but we've definitely moved the dial forward. So that was to recap objective of the program. Get better handle on what's controlling the high grade, get specific structural measurements, data orientation, vein orientation, demonstrate scale along strike and at width, and all 19 holes hit gold. So definitely for a first year program, I would say we hit it out of the park.
Yeah, I mean, I would agree. And I think it was a little bit of a late start last year, but even with the 19 holes, to be able to answer some of those questions and almost triple the depth of known mineralization, I think is a huge win. Outside of the Chicken Mountain area, so all your drilling last year was focused at Chicken Mountain. What other targets at Flat exist, and what data supports these targets, and how do they compare to the scale of Chicken Mountain?
First thing to note is that Chicken Mountain is the largest anomaly or the largest intrusion on our property. Our property is 99,000 acres. We expanded the land position last year based on finding lookalikes to Chicken Mountain, if you will. So we have 6 intrusion targets. Chicken Mountain's just one of them, and so there are obviously part of the same gold system. And typically with these intrusions, consider them like mushroom heads. When you get one in your backyard or whatever, usually there's 2 or 3, 4, right? And so we see these are plutons that come up, these mushrooms that come up. So they're all somewhat interrelated. And the other thing to note is when they come up, it's called roofed or unroofed, or intact or not intact. So the reason why we have placer gold is because some of these things came up and were unroofed and then eroded versus millions of years. But there is a target that is right adjacent to Chicken Mountain called Golden Apex that is not roofed, so it's intact. And the reason why we know it's intact, because if you study the deposit model, there's a classic rock, host rock, right at the top that shows that you're at the top. That's the hornfels that you alluded to that says there potentially could be, an intact intrusion underneath that. So that's Golden Apex. And then there's another one called Black Creek, which actually hosted an old or historic hard rock mine. And actually Placer Dome optioned this property back in the day. But it tells us, again, some drill holes, historical gold production, about 3,000 ounces at 12 grams per ton, tells us the system's very fertile and robust. And just because that mine was there, I don't think that, again, that was the best part of the system. And then these lookalikes continue. There's 3 more. The other thing that I would say, Chicken Mountain is 6.5 kilometers by 5.6 kilometers. And the area that we focused on was only 2K of the 6K. So, and it's interesting. like I'm a little bit of a history buff, but I really love the history of geology and exploration. And I'm like, why did they drill here first? And when we read the historical reports, they were drilling underneath the historical placer workings. The next company that came in, they typically, as most juniors do, they go where the most data is. So they go where the other previous explorer was. And in tectonics, same fashion, we went there because we needed the data to understand what's happening in this area. But by no means is that a default that this is the best part of the system. So what we've identified now is other targets at Chicken Mountain, more centered around structure. And in every gold deposit, structure drives most of the gold. And so we have these kilometer long structures at Chicken Mountain riddled with geological evidence saying this could be an extension of the current known mineralization or a brand new deposit, if you will. And again, kilometer, like these are massive targets. A lot of deposits sometimes are 400 meters, 500 meters. So we're very excited about what the opportunity that Chicken Mountain can present. And we still just think we're scratching the surface, even though there's 74 drill holes at Chicken Mountain. It's almost all of those drill holes are in the same sort of 2K area, which is 74 drill holes across 2K is nothing. But what's happening in the other part, and these kilometer long structures. I'll wrap it up here. I was presenting to one of my shareholders slash investment advisors. He goes, "These are the best targets." I'm like, "Why is that?" Because you don't need to be a geologist to understand them. I was like, "Yeah, if it's got that much tangible real evidence." And in this one case, we have a 2 kilometer long structure transects or intersects as the main Chicken Mountain structure. It's literally like this, as my showing here with man. But we have 200,000 ounces of placer gold coming out of the hill into a past producing creek. We have a kilometer long golden soil anomaly. Again, that's most of it's untested. Remember, soils have never failed us once. Um, we then end up having the northern part about 10 historical drill holes and trenches that all came back with high grade gold, 3 grams over 12, 2.5 grams over 10, 25 grams over a meter and a half in a hole that wasn't even assayed in its entirety. So this is actually the highest concentration of high grade gold that we have on the property. And it's just one portion of the 2 kilometer long structure. That's when this IA said, hey, you don't need to be a geologist here. I'm like, yeah, you could just drill underneath the known historical trench you're drilling. You could drill the intersection of the structures. You could drill the soils. These are the reasons why we're extremely excited to get into the field and test these targets. And I think it's going to be extremely exciting.
No, I totally agree. And you look at some of the targets. You added some property at the north end of your existing property package last year, and you look at the geophysical signature of those, and it looks identical to Chicken Mountain, and just a lot less work has been done on those. And the creeks that drain from those geophysical targets also contain a lot of gold. So that'll be interesting to see what comes from those targets.
Yeah. We're at a point right now where I'm saying to my geologists or my team, and myself included, when I stare at these targets or lying in bed at night, I don't say, tell me. So we have these geophysical anomalies that are draining placer gold, never drill tested. I go, tell me why it's not mineralized. Not why is it mineralized? And tell me why it wouldn't be. Why would Mother Nature be so cruel to mineralize all the other ones and not that one? And the evidence is more for than against. No one can come up with why it wouldn't be mineralized. And that's a great position to be in.
Oh, totally. I'm looking forward to the day that those get drilled. My next question, so you've completed some early metallurgical work at Chicken Mountain. You just announced recently you'll be doing some additional column leach testing on some historical core. Talk about the results of the initial bottle roll testing and what the upcoming column leach tests are going to tell us. Why is it important? What will it show investors? And I think importantly, how do the results of the column testing impact interpreting future drill results?
So again, if I were just to sum it all up, why are we doing this? And ultimately, finding 1,000,000 ounces of gold is great. Finding 1,000,000 ounces of economic mineable gold is obviously the holy grail. The key word is mineable ounces. And I think when people look at resource estimates, myself included, until my early days, let's just say, but it's like, okay, you got all these ounces, awesome. There's a gazillion, 2 million, 1 million, 5 million ounces out there that don't work. So I want to know about mineable ounces. Then I want to know about high margin ounces. And so We're not going to answer that question on year one of metallurgical test work, but again, we're going to move the pegs forward and get those questions. So the metallurgical work that we did, we didn't just go, we wanted to understand the mineralogy, understand the gold extraction that would be optimal. And I think the best case scenario is to have options in front of you. So if I'm a mining company or I'm going into production, I want to have options so I can run different trade-off scenarios on the various metallurgical gold recovery methods. So we did two types of bottle rolls. Like when I say two, we did bottle rolls at two different crush sizes. One of those crush sizes is more coarse and typically used as a proxy for heap leaching. We also did flotation, gravity, and then gravity and bottle roll. And we took probably about 13 drill holes, made composites to kind of mimic what a mining scenario would look like, different grade and depth profiles, and off we went to the lab. And we were getting, 99, 97% gold recovery on the bottle rolls and just extremely fast kinetics. And these are 48-hour bottle rolls. And the wish list or the intention is to demonstrate something that's heap leachable. I mentioned Fort Knox earlier. Fort Knox initially started out as a milling operation. I think the average grade was 0.98, if I'm not mistaken. And then they had all the stockpile of lower grade material. Like, what are we going to do with this? So they then bolted on a few years later a heap leach operation. And now they're heap leaching gold. The current reserves of the material going to the pad is about 0.3 grams per ton. And they're, the cutoff might be like it's extremely low. But the point is they're making boatloads of money processing low grade material. I wanted to demonstrate that this thing was heap leachable for ourselves because I do think, especially when you're in a capital constrained environment, like we are in right now, you want to heap leach mines or have a lower capex, a lower operational cost, and sometimes, better all-in sustaining costs, if you will. So better margins or higher margins. The results from the metallurgical program last year were so good, and we have I think one of the world's best heap leach metallurgical engineers on our team. He came out of retirement just to work on this asset. And so he's a big fan. I'm a big fan. And it's the same team that advanced the Coffee Gold project, the feasibility there, the exact same team. So Coffee, for those that don't know, the Kaminak asset was a heap leachable project in the Yukon, and it had extremely high gold recoveries from a coarse crush. And so that's the path. That was sold for 520 million. We had three major mining companies bidding on it. So that's the path I want to go down with this asset. So we've gone back, collected drill core, and we're doing two columns. And column testing is the definitive test for heap leaching. And we were debating on what crush size to do. Now, like the Eagle mine, for example, that Victoria, it's a tertiary crush. So that's very fine grain. And if you look at all-in sustaining costs for any mining operation, the biggest consumer of energy and the biggest cost contributor is grinding and crushing. So you want to make sure the coarser the crush, obviously the lower your costs are going to be, the less energy you're going to need, the less fuel, things of that nature, less power. So we debated on what to go with, and we didn't necessarily play it safe. Most companies, I think, would have did that tertiary crush or maybe even a quarter inch. We went for a 3/4 inch crush, and those columns got kicked off a couple weeks ago. The leach cycle typically is 90 to 120 days. We'll get the results and then we'll put that out to the market. Again, it's not the be all end all, but it's a step in the right direction. If that step is positive, then we intend to do a 2-inch crush and then ultimately work our way to a 6-inch crush, which is a proxy for run of mine. And again, not to say that all the mineralization could go on a pad or not, but again, we want to exhaust that avenue because I think one of the turning points for this project, everyone is starting to appreciate the scale. I think it really centers around economics, and a great way to highlight economics without an engineering study or resource, which is kind of the objective of this year's program, is to say, okay, how can I tell you I'm great at the sport without actually, having these formal criteria? And metallurgy and engineering is going to be a key driver for that. So that's the rationale for doing it. In our second year of drilling here, we're going again for the jugular and going to demonstrate that the columns are viable and can produce a heap leach opportunity.
So ideally, you want to show that a coarse crush can achieve high heap leach recoveries. Like, what would you say is would be a what would make you happy in terms of recovery?
If we look at the average, heap leach mine right now, your average recovery rates are typically 65%. I'm pulling these numbers, they're ballpark estimates, so about 65%. And I think your average heap leach mine, the average grade is about 0.6, 0.5, 0.6.
I think it's actually lower.
I
I
actually,
think it's like a half a gram.
you know what? I sat down with Mark Smith, our heap leach engineer, and he actually said that too. But I don't have the. He said, let's look at all these mines, and so I'm actually going to build out a study internally, and I do also agree with you. It's about half a gram per ton. Your average grade of an open pit mine right now, typically a million operation, is about 1.04 grams per ton. So you asked me, but what's the optimal recovery? Well, anything above average, I'd be happy with. And if I can process high grade gold and not leave a lot of gold in the pad, so if I can process high grade gold and get 85, like coffee, 85, 80% recovery, then you do a trade off study whether or not you want to build a mill or not. But again, this is way down the road, but the point is that that's kind of what be always above average, and that makes things a lot easier. And I'm knock on wood, I'm betting we're going to be above average, and it'll be interesting to see how the higher grade material responds as well. And even if the higher grade doesn't respond, the benefit again is to have options. You can do some with the heap leach pad. You can build sort the ore, the higher grade ore, and put it on run it through the mill. It's very forward thinking, and for our sake, and I haven't really communicated this, but I mentioned Mark Smith, our heap leach engineer, world recognized, worked on, been around for, I don't know, 40 plus years. But the point is that we're going to do an internal scoping study. It's not going to be for market or public consumption. We're not allowed, but it's for internal use to say, okay, what are the economic thresholds here that I need to demonstrate an economic opportunity? And the thing is, with the engineering, sorry, maybe going back to drill play versus mining opportunity, the engineering will actually influence on where I drill. So if I want to find high margin, recoverable, free milling or heap leachable ounces, those are going to get a nod with the drill bit before something else that's deeper, maybe not free milling or not oxidized or things of that nature. And getting those answers earlier on are so significant. And again, we can also, if you're in our data room or sign a non-disclosure, major mining companies can have access to that. So that's where we're going internally. So once we get these results, we're going to start building, hypothetical mining scenarios. And a lot of those costs are fixed that you can pull from other mines, like labor costs, things of that nature. And then you can start building a hypothetical model or hypothetical feasibility or internal scoping study on what works, what doesn't work.
That's great. I think that's like an excellent path forward. And I've modeled up what I think is at Tectonic right now. And you can find that note if you go to our website and sign up for our research. I mean, I think Tectonic already has a large amount of ounces. I'll say, millions of ounces, not 43-101 compliant. That's just my estimate, but they already have a substantial amount of data and ounces, I think, in the ground. So you will, with that data, you'll be able to do a lot of internal work. So Chicken Mountain sits on private land owned by Doyon, one of the largest native regional corporations in Alaska. What is the significance of this in terms of progressing the project? And can you discuss your relationship with Doyon?
It's one of Alaska's leading native regional corporations. These native regional corporations were formed as part of the Alaska Native Settlement Claims Act, ANSA for short, and they are a for-profit entity. They were put in place to generate profits for their shareholders, and so they have about 20,000 shareholders. They're also the largest private landowner in the state and one of the largest private landowners in Alaska. When I moved into Alaska, I kind of went, let's just say, Alaska Native Regional Corporation door knocking. And because of the land, the plethora of land that Doyon had, everywhere, all the areas that I liked from a geological perspective, which actually happened to be mostly in the Tintina, just for reference, Doyon has land there. And this obviously is a plug for them, which is maybe works against me. But the point is that they have a lot of land that is, has some really good mineral endowment. And so I wanted to make sure that they were pro business and pro mining. And what sort of solidified that is obviously meeting them, looking at their track record. They've had deals with Newmont, other major mining companies. I mentioned Fairbanks Gold, but really the one that just screamed to me was this deal or this agreement that they have with ConocoPhillips, one of the largest oil and gas companies in the world. But Doyon said, Doyon did, what they did is their actions speak louder than words, is they actually funded and built $175 million oil and gas rig called the Beast. You can Google it. And I was just like, wow, man, this really speaks to their commitment to natural resource development on their land. Doesn't mean you get a blank pass, but it definitely says, hey, we selected this land based on mineral prospectivity, and we want to advance these lands. So we were one of the first companies in probably over a decade that they did a mineral deal with. We kind of hit it off right from the get-go. What I introduced was this concept of doing a production agreement, or an IBA, which is called an impact benefits agreement. Traditionally, most junior mining companies negotiate an IBA at the feasibility stage. And I asked the question, why can't we do that on day one? It was quite the laborious process. It took about 10 minutes took about 10 months to orchestrate. And we now have a model or a template or an agreement that we can carry forward. It's so important because I'm on native owned land. If I want to build a road, I deal directly with them. The advancement of the project is much more streamlined than dealing with the feds or the state. Now, the ultimate permits, like say your water license, that has to go through the federal regulatory bodies. But when we go to them, or I go to a Newmont or Barrick, or I go to a small community, me and Doyon, the CEO, we're going in hand. We're presenting a unified front. And the CEO of Doyon is actually an Athabasca native, Stanford University graduate that's committed to the advancement of Doyon lands, and obviously his company or corporation succeeding. So the benefit of having them is that it's perfectly aligned. We're not going in on year 5 and saying, "Hi, I'm Tony Reda. Can we talk?" Or to the local communities or the First Nation or Indigenous groups. We're going in hand. So we go to Barrick or Newmont. It's like, don't take my word for it. Here's the CEO. Here's the native corporation, the entire team. I have his number right on my phone here. Any shareholder wants to talk to him. This is what I love about Dolan. Again, another plug for them is that I can call them up and say, "Hey, let's meet with Steve," and they make time for me because they're committed to the advancement of their lands, and they're also committed to environmental, protecting the environment, things of that nature too. So I think, like I said, it's not a free pass to go wreak havoc. There is a delicate dance there. I think this is extremely advantageous if you're truly out there to find a mine, engage early, form those partnerships. And we've been able to do that. And the last layer that just came to me right now is this process or this relationship has unfolded to the point now where Doyon has actually made investments into our company. They've invested close to $4 million. And there's nothing that speaks more loudly. I mentioned the beast. Well, the next thing after that is saying, "Hey, Tony, here's our capital. We're going to invest in your company, and that capital is going to be utilized to advance our lands." And they've done this not just once, but several times. So they are our second largest shareholder, and it is such an honor to have Indigenous groups giving you their capital, because typically in our industry they're viewed as there's an aversion to them, or don't engage until you need to, and this completely flips the model upside down.
So the drilling season is almost upon us. What are your exploration plans for 2024? Planned drill meters and costs, and how much cash would be required to complete the program?
2 drills already at site. It would literally be turnkey. It is a bit of a dance right now with the market and things of that nature. A lot of CEOs try to hide it or whatever. Like it is what it is. We need to raise capital to execute the program we want. Thankfully, there is interest. It's a matter of saying, okay, when do we go in? To do the program we want to do, there would have to be a capital raise. And I think what you'd get for that investment in Tectonic is real, tangible, actionable items, such as the metallurgical results. I didn't mention this earlier, but we have 4 historical drill holes that the 2003 Explorer cherry-picked certain intervals in that drill core and sent only that to the lab. And one of those examples, this hole where we received 1.5 meters of 27 grams per ton, and either side of that is not assayed. So that's been sent to the lab. We'll get those results here in hopefully 60 days or less. And then you'll get drilling, 2 drills, more specifically targeting these kilometer-long structures, and then also some of the higher grade areas at Chicken Mountain that were previously drilled, where we want to step out and again continue to demonstrate continuity of high grade, but also try to further advance our understanding of what's controlling the high grade. Now, you asked about meters. Well, it is a function of capital. To go in here, we want to do at least 5,000 meters, if not 10,000 meters. And that program is around the $4 to $5 million mark, so again, depending on the size of the program. And one thing, there is a stigma that we're seasonal. That's not necessarily true. You can drill all year round. You can mine all year round. Last year, and you came up to site and towards the end of the season, but last year we shut her down at the end of October. Our neighbor Donlin, they've operated or drilled from the middle of January right through to November 1st. We don't have a gun to our head to say go in right now. So yeah, so that's kind of the thought process, is to get ready, continue to collect interest on financing, and then at some point during the summer pull the trigger and fire up those drills and get the party started.
So let's say that you are successful in raising funds and you're out there drilling. I just want to ask, would you be testing any of those new targets to the north of Chicken Mountain?
It's not for not wanting to. It's a matter of, I use the analogy, you have 3 kids, which I do, by the way, and you can only afford university for one of them. So who's going to university, right? So we have, like, just at Chicken Mountain alone, we have this Alpha Bowl target 1 kilometer long, the added Happy Creek structure 2 kilometers long, and then those high grade areas. So I will say at least one of them will get drilled. If we can get more capital, more meters, we know what we got to do. I mean, we'll definitely do it. But these targets are all, Golden Apex, the other sort of intrusion targets outside of Chicken Mountain. I think the smallest anomaly is about 2Ks by 2Ks. So it's like, okay, how do you tackle this? So we will drill test one of them. And one of the historical holes is actually from Golden Apex. So we'll see what that returns. And that historical hole is, sadly, it's not in the best spot. It's not where we would drill it. It's actually a head scratcher why they even drilled it to begin with. But nonetheless, you'll get data, gold data, multi-element data, and then that can influence us on where we go. But Golden Apex seems to be the obvious target where we want to drill this year outside of Chicken Mountain.
You said you've kind of seen some increased interest lately. I mean, I'm sure the price of gold reaching all-time highs has maybe something to do with that. What's your prediction for the gold price over the next 6 months?
Everyone's excited, and me too. Like, we need this. We'll take anything we can get, us miners. I think what I would say is that the gold price has gone up, especially when you look at it in other currencies. Like, it's pretty damn good where we're at right now, and what we're going to see and what we're seeing. The majors, their share prices are starting to move. Like Nico, for example, just amazing, uptick in their stock. But we're going to see Kinross produce their a great quarter. We're going to see more of that. And so, for me, I'm happy with $2,300 US gold. I think that's going to set the stage for the major mining companies to really shine to the generalists. Not, they to ourselves is one thing. As long as they stay the course, don't do anything too funky, which is important. I think that's good. And as far as, like, overall, I wouldn't be shocked if we did see $2,500 to $2,600 US. At the end of the day, I just came back from a business trip to Asia. Most of us here in North America, we get the narrative here. You kind of have to step outside of this, and when you do that, Europe, Asia, I mean, gold is where everyone's moving towards, and not just the governments or central banks. I mean, that's been the biggest consumer of gold, well, in quite some time, but even more so now. You're seeing them just, obviously lessening their dependency on the US dollar and really diving into gold to backstop their currency. But we are also seeing is the individuals moving into gold, or family offices moving into gold. And that was surprising, but then also comforting when I was out in Asia. There's how can I get the physical gold? How can I get an offtake agreement? Where do I get more bullion? That is just, I think, going to continue to drive the price, and silver as well, higher and higher. So I wouldn't be surprised if we hit $2,600 US. And at the end of the day, if we just stay above 2,300, and I think that's what most people want to see in our space, just consistency. Don't give me this volatility. Just show me a stable price. So then set the majors up for a win. They've been in the penalty box, and rightfully so. We've all been in the penalty box, but this gold price, it's going to give them an opportunity to shine. The spotlight's on them now. They'll deliver, and it'll trickle right down. And it's just, I think it's a great place to be right now.
So to wrap up, Can you just give us the key catalysts that current shareholders and potential new investors who invest in Tectonic would have to look forward to between now and the end of Q1 2025?
100%. So what I first would say is that, we've executed last year all 19 holes. We've only added value. The fundamentals have only gotten better, yet the market cap has gone down. And that's a similar theme across the board. Reach out to 3L or Steve here to get their analyst report, if you will. The catalysts are going to be, and this is part of our value creation plan for the year. This has been well thought out. This isn't just fly by the seat of your pants. Everything we've done this year is to demonstrate a mining opportunity. How are we going to do that? Heap leach column testing. We can demonstrate something that's heap leachable. The market may or may not respond to that, but the corporates, the major mining companies, and the sophisticated investors are going to appreciate that this could be game changing for the story. That's what I'm actually most excited about, to be honest with you. So we have metallurgical results less than 100 days or so, 120 days or sooner, depending how quickly the kinetics come back from the lab. And then we'll have those historical drill results. In less than 60 days, we'll get exposure to 4 drill holes that potentially could yield new discoveries or broader widths of mineralization in new areas. That's the other thing. It's in new areas. And that also I'm super pumped about, not just to get the gold, but again, the multi-element, because the multi-element can tell you where you sit in the model. It's just valuable data. Then you're going to get the contingent on a financing, a drill program that is not just drilling some pie in the sky geophysical anomaly in the middle of nowhere. These are real, tangible results. So for context, geophysics, when drilled, have never failed. 100% drill success rate. Soils, when drilled, never failed once. 100% drill success rate. So you'll get access to a drill program that's focused on testing new kilometer-long structures that are backed by placer gold spilling out of the structure, kilometer-long gold and soil anomaly, historical drilling and trenching that runs, and then also the geophysical anomalies intersecting structures. There's about 4 of those. And then we're going to step out on, there's a trench that runs 27 meters, 6.5 grams, drilling underneath that, stepping out on 400 meters of 0.4, 37 meters of 1.1, 3 grams over 10, just stepping out. When I say stepping out, they're probably going to be 50 meter to 100 meter step outs. And we're going to take that data when the results come back, and we're going to marry it to a column test. That's going to show that, hey, this could be a potential starter pit area. Where's the first shovel going? Well, here, because you have mineralization starting right at surface, it's 500 meters wide, and this one starter pit, which could be a deposit unto itself. And then you're going to have metallurgical results tied to that. So this is our way of showing to the market and to corporates that I don't need necessarily an engineering study to at least give you some sort of comfort that this could represent a mining opportunity. So those are the catalysts coming down the pipeline. We are collecting interest on a financing, and the best conduit to do that is 3L. You guys don't need an introduction, but the point is, Steve actually approached us, and Mark approached us and said, hey, we love your story. How can we work together? It's not even a year old, the relationship. And if there is interest, you're definitely a pathway to make that happen.
For sure, yeah. I mean, if there is interest, you can go to our website and there's a contact us now. You can also find me on LinkedIn. Tony, thanks for joining us today and going over Tectonic's story.
Thank you for having me. It's a pleasure. And please reach out, Tony at tectonicmetals.com if there's any questions.
Thanks, Tony.